Welcome back. We are now in conversation with the CEO and MD of PNB Housing Finance, Mr. Girish Kousgi. Mr. Kousgi, good afternoon. Thanks for joining in. Let's start by taking your assessment of the quarter gone by, the hits and misses here, and what can we expect going forward?
Good afternoon. I think if you look at PNB Housing, we are through a transformational journey since last 1 year. And if we have to look at the asset growth, let's say 1 year back on retail especially, it used to be about negative or zero. And from there, we've reached to a stage where on a YOY, we are now at 13.2% asset growth on retail. We had taken a conscious call to run down corporate book, which used to be about 18,000 crores. Now we have ran down the book. Now the book as of December is 2,200 crores. So on a YOY disbursement is about 22% growth. So if you see, we should not see one quarter. We should see quarter three. We should also see, what has happened in last few quarters directionally and where we are headed to. So talking about the quarter, obviously X one-off, the revenue is flat. The reason for that is that we are running down the corporate book, so that would have an impact in terms of revenue. And also there was a one-off for us which impacted negatively. Otherwise, if you see in terms of disbursement in last 4 years, in last 16 quarters, last 3 out of 4 quarters has been the highest disbursements. Number one. Number two, in terms of retail asset growth, last 3 quarters out of 4 quarters has been the highest in last 4 quarters. So I'm saying if you look at last 4 years, last 3 quarters we've done well, both on disbursements and book. So directionally we are there. Only thing is, since it's a transformational journey, we had a lot of things to do. Obviously, we're trying to get things in order. So obviously, there was a bit of hit on NIM. So, but going forward, we had guided about 3.5%, so we'll be able to maintain that. In terms of growth, we had guided 17%. It looks like this year we might end up around 15%. But the guidance for coming year on retail growth is going to be about 17%.
Understand better, what will the retail loan mix look like? How much of it will be from non-housing and how much will it be from individual housing?
So currently our focus is only on retail. Retail is about 96.5% of the entire portfolio, and that was by design since we had taken a call to run down corporate book. Within retail, currently we are operating in 2 segments. One is prime and the second is affordable. Affordable we just started about a year back, and now the book is about 1,100 crores and the rest is prime. Coming April, we're going to start one more vertical called as the emerging markets. So within retail, we'll be operating in 3 out of 4, that is prime, emerging market and affordable, which is Roshni. The only segment where we won't be there is super prime. So we'll be in all the 3 out of 4 segments.
Sure.
The mix is going to be, I think, incrementally for the coming year. Roshni is going to contribute about 18 to 19%, and emerging market that we are going to start, that will also have a decent share. So in terms of product mix, we are looking at about 25 to 28% of non-home and the rest from home. In terms of profile, we would be anywhere between 60 to 65 on salary and the rest self-employed and DCP.
Right. So can you give us also an indication when it comes to credit costs going forward? So I believe at the end of the second quarter, you had given us, an idea of around 0.4% next year onwards. Is that how things could take place, and what are the factors that could in fact help you reduce your credit costs?
We had guided 60 bips for the current year. But if you look at first 9 months, we are at 32 bips. So I think quarter 4 also will be on similar lines, and even coming year it will be on similar lines. So for coming year, we had guided 40 bips. I think it looks like it will be on what we have seen in the first 9 months for next few quarters and for the coming year as well. So that is the guidance on credit cost. And we also have a lot of opportunity for write backs, both from corporate and retail. So I think this is one opportunity which will unleash in next few quarters.
Okay. So an idea on the affordable segment as well. How are things panning out there? How are things shaping up? And if you give us an idea about what the if not the next quarter, but what FY25 could look like in this particular segment?
So we had initially had a plan of opening 100 branches in affordable. We opened 100 branches. We saw very good traction, lot of opportunity in this space, and therefore we upped our target and we additionally are opening 60 branches. So by March, in another 2.5 months time from now, so we will be 160 branches on the affordable side, and overall will be at about 300. And from April, the new vertical is going to start, that is the emerging market. On affordable, as I mentioned, the mix is getting changed. Incrementally, if you have to look at this year, it will be about maybe 10 to 11%. And for coming year, affordable could contribute about 18-19% on the incremental basis.
Sure, sir. So also in terms of expansion in geographies, of course, most of your business does come from geographies like Maharashtra, a lot from Delhi, Tamil Nadu and Telangana. Can you give us an idea about where the company is looking to expand, in what areas, and in what pockets are they seeing a lot more opportunity?
So I think directionally on Prime, Roshni and emerging market will be focusing on all the zones, but there'll be a little bit more focus on South because A, opportunity, B, we also have an opportunity of getting higher yield. So the skewness would be, slightly towards South, and North would be almost about 1/3 and West should be about 28, 29. So this would be the mix.
All right, sir. So finally, going into this particular quarter, that's the fourth quarter. So any challenges that they may be in store going ahead?
I think if I have to talk about challenges in Q4, there seems to be no challenge per se, but obviously since the corporate book is running down, so I think that we need to try to make up through higher disbursements in Q4, which we are geared up to. Otherwise, there is no incremental challenge that we are facing. So I think that's where we are.
All right, Mr. Kousgi, we leave it at that. Thank you so much for joining us and taking us through all that we can expect with respect to PNB Housing Finance. Of course, we'll keep an eye on a whole host of factors that the management has already shared with us. And of course, PNB Housing Finance is one of the main players as far as the particular sector is concerned. So we'll be keeping an eye on that one for sure. But on that note, we shift now focus to the